Hello, Price Action Analyst subscribers. I've got a subscriber question here, so I'm going to answer it with a video response and send it to you all, obviously. The subscriber says they've been toying with the idea of moving their portfolio into Bitcoin or Ethereum the last few months. They've had 65% of their portfolio in ZIL. They like the fundamentals. They were in 2017, and I think got out for a profit and then got back in this year at 0.00003, so 0.3 of a cent. So they've ridden the retracement, and so they're bullish long term on ZIL, but they're scared of missing the big rise. So I guess the question is they've got a big position in ZIL. I see basically what they're at. They've got a big position in ZIL, and they want to temporarily move it into Bitcoin or Ethereum to take advantage of the run. So the first thing I would say is be careful of any, and we're talking about psychology, the fear of missing out bit when you see Bitcoin and Ethereum run and you want to get in, and then you're, moving 65% of your portfolio out of something into that. It's generally not a good idea, right? You're really just, all that's really motivating you is a fear of missing out. So that in and of itself is not a good idea. But let's just have a look at ZIL. So this is ZIL in US dollars. So the entry point there is marked with green. And apparently, I'm almost not sure why this person is subscribing to my service, because apparently they got in here and got out near the high and then got back in here. So, I mean, that's pretty impressive. Like, that entry at that low, I don't know how to do that for you. I don't know any way to get you in at a low like that, unless you're just buying washes of pivots. So when this low is washed, I mean, if you're just buying that, then maybe, but I'm not going to get you in there. So, if that was your entry point, it's congratulations. So that's your entry point. And so again, this is in US dollars, not Bitcoin, but when you follow price action, I'm talking about where you should get out now. So I haven't framed up support and resistance. So we're just looking at wicks, right? So again, there's wicks there, but you always want to follow the trend. There's wick there, but there's not any significant selling. The small wick there, no significant selling. And you get a wick, and you get another wick, and you get more selling, and more selling here. Always, the way to sell that top is to go, all right, here's a significant. So this wick, these two wicks have resulted in significant selling, and you want to hit the retrace. So you bought, you're in, you hit the sell button somewhere there. So there's a couple of ways to do that. Generally, that when you get that sell-off, you're going to get a retracement. So you can just follow these bars up. As a bar breaks, you can sell on the break of the bar. So your selling point would have been there. Or you can follow it more closely. So these are hourly bars now. I mean, you could have just said, all right, it's selling, you get the wicks, you just sell within this wick here. Price gets back up into that, you hit the sell button. You could frame that up, a break of that and a retest, you hit the sell button. you know, a retest of this air here, you could have sold, but it never quite got back there. That wick was probably the best indicator to exit. And so, you know, price has gone down. You've got this wick, you've got buying pressure off that wick, and then you're looking for an exit. That wick was probably a good place to exit. The thing with trading is always try to be patient, because there's always a better place. You'll find no matter what position you take, there was always a better entry point after you got in. I mean, most times, like 90% will always be the case. So always try to be patient. You know, never resist that urge to have to get in, because it's rarely ever. The only time that I'm kind of will just get in, and this is not the same thing, but like if it forms this wick and price goes back up here, I'll just put a buy order on the bottom of that wick. So as price gets down there, I'm long. You know, but again, that's a very short-term technique. That's kind of futures trading-esque stuff. You have to recognize that this selling pressure now, given the wicks on the daily pars, this selling pressure now is indicative that our short-term bias now is down. So you don't want to be buying, right? So that's how I would have exited ZIL at the top. So the point of all of that was that he hasn't exited, he's still in the position. And so, you know, you don't want price to go and test your entry, but at the same time, I think that that's unlikely. And this is not a good place to hit the sell button, because you've got, you know, wicks, you've got washes of the wicks, you've got buying pressure, you've got substantial buying pressure with air, you got a retest of the air, prices come back. So, you know, it doesn't look overly bullish, but you're kind of selling exactly where you might expect the buying pressure to come in. So what I would say to you is that if you're really looking for a way to get out, if price pushes below this red bar and it closes on its low, then you could hit the sell button. Just be prepared to see a buying bar the next bar. But if price is going to go lower, it's going to push out of here, and it's going to make, like, see these red bars here, how they closed on their low? You start getting that out of here, hit the sell button. It just, of course, the risk is that price, you know, pushes up from there, but you're now higher probability that price is going to cycle down, right? Especially if this is a support area, which is now becoming resistance, right? But again, it's up to you, and there's always a number of ways to do that. Again, you can let it come down and wait for a retest and then hit the sell button, because that retest is an ideal place to get short. But the risk is it never does that. It just pushes down, right? And again, my expectation for ZIL in the long term is for another leg up. You just don't know how deep the retracement's going to be. So let's just see where we are in terms of the question. So I'm just talking about ZIL now. Like, if you want to lock in your profits here, because you've done, you know, pretty well. What are we talking? Lots of profit. Like, 5-6 times. You're still 6 times the money that you put in. I hope it was a lot of money. So protect it, right? You don't want to sit through that. Have an out. And this is before I get to Bitcoin and Ethereum, right? Like, have an out. Have a point that you're, all right, I'm not willing to go. I want at least, 3 to 14. So if it hits that, I'm out. because you can always get in. Like, let's say, this is the other thing, right? Let's say you get out here and price cycles down, but then comes up here, and you get a buy alert here at 1993. Okay, you're buying at a little bit of higher price, but you're about to ride that up. You'll live. And the trading books I've read said, consider that the cost of insurance. But if it starts making these here, it's possible now that it's coming down. You just don't know after that, right? So that's ZIL, and that's the US dollar. I'll just have a look on Bitcoin. So I do have support. The brown lines are support and resistance lines. So you can see that support line, that wasn't there. That's been there for a couple of days, the line. So you can see off of that line that you're getting buying support there. So maybe support will hold. You've got a lot of momentum coming into support, so expect a little bit of buying pressure and then some sort of retest. So what I'm looking, if support's going to hold, what normally it looks like, it doesn't always look like this, but if I see price comes up, leaves a wick, comes back down, maybe washes that pivot ideally, and you get a big buying bar, you can buy that. Or it gets like air pumps out of there, the retest of the air and the trend line, you can hit that long too. And then that, if you get that outside of the trend line in a retest and we hit that long, then that's kind of best case scenario. Then I'm like, all right, we're definitely coming up to support, and given this context, I'm gonna expect that. So what's the point of all that with relation to the question? We might be at a, we might be close to a level now where, you might see buying. You've got previous high support. If this support doesn't hold and it pushes through here, well, then you've got air here, which is not, it's not significant, but you've got this support line and then this trend line. So, I mean, if it gets down here, that's an extremely deep retracement. It's not really ideal. It's not exactly what we want to see, but I don't know, if Bitcoin just rockets to 14,000, you might actually see that. So here's I'll try and summate it for you. Have an exit point. Have a point at which if it gets to, then you're out. And you might even want to put that trade in there, right? If it gets to that point, it's out. And if it rockets up from where you sell, don't worry. Like, that's why you don't have an exit point, because you don't want to see price go away from you. But do you want to, if you don't have that exit point and price cycles down to your entry point, you're going to feel better or worse? So I would say have an exit point, and know that you're going to exit at that point, or put that order in at that point as at a limit order and let it sit there, and then just let it do its thing. That would be my advice this late in the game. Again, if we were up here, you could it would have been easier to sell, but here, just you got to have your own exit at which you'll just cut it. So I guess the answer to the question is no. Don't sell ZIL and put ZIL into Bitcoin and Ethereum. Rather decide on what your personal limit is, like your line in the sand, and put your order there and just see what happens. It's if price pushes out of here, you might want to have 1607 as your limit. If it pushes out of here, like without seeing that, it's hard to say. If 14 was acceptable to you, It's okay. It's just I generally don't use stops because they're generally going to get hit. It's just you need to protect the profits that you've made, and so at this late stage, that's how I would play it. I would just say, or if you decide that 14 is your line in the sand, stick it there, and if price comes down, maybe it hits you and that cycles out, but the risk is it just comes down and keeps going. So then if it keeps going down, where's your line in the sand now? It's at 12. What about at 10? You still gonna wait for it to turn around? So that that's how you lose accounts in futures trading. So put your line in the sand and stick with it. So that hopefully that's answered your question on ZIL, and I guess it's very specific because he's holding the position, but at the same time, this is somewhere where ZIL might lift out of it, and guess the US dollar one looks a lot healthier than the Bitcoin price. And Bitcoin, yeah, I'm not going to advise you to chase that. That's silly. That's never a good idea. And, even if you buy here and it gets to my projected target or further, it's almost always going to cycle back, right? Show me the straight line on that chart. That price has never come back and tested. There are none. These were not straight line runs. Maybe here, if you bought in there, not even there. I mean, even there, price was retested. But if you bought there, price is you've not been retested, and you probably won't be. But most of this price action has been retested, so don't get away from the habit of seeing that and think I gotta move my portfolio into that. If it goes, just let it, and when it comes back in here, we will look for good entry points. And here's the other thing too about trading. If price rockets up to 19,000 and you never get a chance to get back in here, so be it. It's very, very small probability, as I've shown, but live with that. Look at all the other coins that are going up. You're in ZIL. I think ZIL, if this goes from 10,000 to 19,000, it's only doubled. ZIL's got, way more potential, as do a lot of the other coins. So yeah, if you had 65% in ZIL and you had, let's assume that the remaining 35% was split between Bitcoin and Ethereum, I would leave the Bitcoin. And I would leave the Ethereum too. So these are daily. Oh, sorry. Ethereum to Bitcoin. Why can't I see it? There it is. Ethereum cycling back. Again, I don't know. I probably wouldn't touch that. What I would do is, if you're in Ethereum, I'm hoping that, maybe your entry point was as good as ZIL and so you're making money. Wait till it gets back there and you see a entry alert from me. And then even if you have to shoot me another question, it's fine. But let's say, for example, this gets down here and Bitcoin's at 14 or 15,000. It's making a big series of wicks. And you're like, hey, should I cut the Bitcoin and chuck it in Ethereum? Then yeah, that's a different scenario. I would advise you to do that. But you need to wait for that setup. Bitcoin's going to run harder, and given this strength, generally you're going to see another. Even if this top fails, you're going to generally see another push for those highs. of some sort. Maybe it only gets here, but with that strength, you generally see what's known as a fish hook. So so I wouldn't advise selling that there. But this breakout looks very strong, especially from the context of this. Like, if I almost want price to get down here because that's such a good entry point. And look at the volume. All right, there's a lot of volume on the selling, but I like Ethereum. So that's how I'd play it to answer that question. I know that's been a very long-winded answer, but to me, a lot of this stuff's very nuanced. There's no like cut and dry answers. So, but to answer this subscriber's question, put a line in the sand for ZIL, and keep your Bitcoin and Ethereum positions where they are. If ZIL hits your line in the sand, then use my my alerts to put it in stuff that's going to be appreciating, right? And my Ethereum position was, I mean, I don't know which video it was, but it was a good example of that. I took it out of, I think it might have been Cardano, and I put it into Ethereum and Nano. Nano hasn't worked out, but Cardano's been cycling back. Look what Ethereum's done. So my account is just, every day I come to my account, it's up. It's weird. And the other, I did a video about the Bitcoin thing and how Bitcoin's going up. So the graphs look very bad relative to Bitcoin. But what I'm finding is, in terms of US dollar, everything's still, either going up still or kind of holding steady. So when you log into your wallet, the value's up, right? So don't, I still want to do everything in Bitcoin because we're looking for a Bitcoin replacement, so something that's going to really appreciate in price. So long term, we always need to be looking for stuff that's appreciating relative to Bitcoin. And if we find that while Bitcoin's appreciating, then that's even better, right? But if stuff is not going up now relative to the US dollar, like, I would seriously consider getting rid of it, because the US dollar is a very quickly depreciating asset. And if you don't believe me, again, go look at gold and silver and Bitcoin. It's not, that's the dollar. That's 10 trillion of money printing you're seeing there, not necessarily gold appreciating. Anyways, I hope that's answered your question. Stick a line in the sand for ZIL. Keep your Ethereum, keep your Bitcoin would be what I would do. Ultimately, the choice is always yours. The choices you make, your responsibility. But please, I'm here as a tool and as a guide for you, so I'll help you in any way that I can. Thanks for watching. Appreciate, again, everyone subscribing and everyone's positive emails and comments. I do appreciate it a lot. If there's anything that you need from me, or you have any suggestions or want anything, please email me and I'll do my best to help you out. Thanks a lot.